Power Breakfast on CNBC TV 18. Now, the Cabinet has approved the merger of state-run Vijaya Bank as well as Dena Bank with Bank of Baroda. Now, the government is making it the second consolidation of PSU banks after SBI post this merger. In fact, Bank of Baroda will become the third largest bank after SBI and ICICI Bank. Now, soon after the announcement, the banks released their respective share swap ratios. Lada has, in fact, filed this report earlier with all those details.
The swap ratio of 110 shares of Bank of Baroda for 1,000 shares of Dena and 402 shares of BOB for 1,000 shares of Vijaya Bank broadly translates into 1 share of BOB for 9 shares, 9.1 shares of Dena, 1 share of BOB for 2.5 shares of Vijaya Bank. Now, this swap ratio, if you compare it to the last closing market price of these banks, indicates that Dena Bank has been valued about 27% lower than its closing market price, and Vijaya Bank has been valued about 6% lower than its last closing price. So chances are you're going to see BOB gain a bit when it opens for trading tomorrow, and the other two shares trade a little at a discount compared to their previous closing price. In fact, Dena will fall rather substantially. Now, what will be the merged entity looking like? The NPA of Dena is high, and that may push down the next year's book value of BOB just a little, by about the adjusted book value by about 4%. But overall, the GNPA doesn't change much. The merged entity will have more or less the same GNPA as the current BOB. And the net NPA as well increases just marginally to about 5.3 from the current 4.9. So not much difference. The capital position also of the merged BOB will be quite healthy at about 9.1. That is the common equity. Edelweiss's view is that BOB will have to issue 30% more shares when it amalgamates Dena and Vijaya Bank into itself. The merger also will make BOB a very large entity, so it's possible that the new BOB, the amalgamated entity, will find its place in some of the large indices, you know, the MSCI Asia Index or something like that. So it could therefore get some bit of a premium. Now, what do we still not know? We still don't know what will be the new name, who will be the head of the new merged entity, what will be the roles of the managing directors of the smaller entities. So those are the things that we need to know, how the new management will look like. And then, of course, after the new management is in place, we will know what synergies they can get. So there are a lot of unanswered questions, but it looks like that tomorrow itself, BOB will trade much better than the other two shares.
Of course, these three stocks will be in focus today, but let's move on to the auto stocks. With a clear slowdown in demand, most auto companies have been reporting weak sales figures for the last few months. Pawan Munjal of Hero MotoCorp has called for a reduction in tax rates, especially for two-wheelers. He argued that two-wheelers cannot be classified as luxury goods and taxed at 28%, and made a plea to bring taxes to the 18% slab. But Bajaj Auto's Rajiv Bajaj told CNBC TV 18 that a tax reduction at the current juncture could mean more inventory pile-up, especially at a time when stocks are high.
Two-wheeler makers don't import very much, so I don't see why currency was such a big factor. In fact, for those of us who export, a weaker rupee is a better thing. Secondly, commodities, if at all, can hit the bottom line, but they don't explain lack of growth, because we have not been able to pass on costs to customers entirely. So that's also not a big issue. As far as cutting GST is concerned, I would only make 2 points. One, that as I shared with you when we spoke towards the end of December, even within the domestic motorcycle segment, the sports segment where we lead with the Pulsar has grown by actually 25%. Whereas the mid segment of the motorcycle has grown by only 3%. You know, I don't understand that when the sports segment is 50% more expensive, you know, the products that we sell there are 50% more expensive than what sells in the mid segment, commuter segment. What will be achieved by reducing 28% to 18%? I'm not quite sure. So I think the answer lies elsewhere. I would urge some caution to be exercised when it comes to cutting back on GST, because just imagine at a time when demand is soft and the industry has high stocks, if a consumers were to be told today that GST is coming down, let's say on 1st March or 1st April or something, by 10%, demand will fall by 50%, I can guarantee you.
But Rajiv, how serious is the demand issue at all? Because there is slightly slower growth even in your case, but for the others, it's a steep contraction, even for Aisha. So is there a demand issue in the market?
The short answer, Lata, is yes. The longer answer would be we should see it in two parts. One, manufacturers, and I would say we didn't make that mistake. Thankfully, manufacturers did step up production quite a bit in anticipation of the festive season, which didn't pan out as it should have. So part of this, as Dr. Goenka was also explaining in the morning on your channel, is definitely inventory correction. But part of it is definitely a softness in retail. I don't think there is any significant growth right now in the market year on year.
Okay, time to slip into a short break. Up next, we get you some perspective on how the volatility in developed markets will